This is Paul Singh, the market speculator with bullsonwallstreet.com with the free weekly swing trade report. Thanks to everybody for joining and watching this. Really quickly here, if you're not a member of the trade report, you can go to bullsonwallstreet.com, swing trade alerts, scroll down to the bottom here, and there's a monthly plan for $100 a month, a quarterly and an annual plan that is 50% off, $49 a month. Like I said before, not sure much longer we're going to do this. I didn't want to go this low. Kanal said try it out, and we are doing that. Okay, let's get to the trade report now, weekly swing report. We can see here, SPY, we are coming off this W pattern, which we actually played really well as it developed. Normal technical analysis, classic technical analysis says play the breakout. We kind of gamed this as it was developing, and we're keyed in on commodities, which is why we had such a good first quarter here, up $21,000, 21% off a $100,000 account. So gaming this and now gaming this trend is what we're trying to do going into the second quarter. I just did a webinar. There's a free replay if you want to check that out, where we went over a few of the trends that are developing now. One of them is commodities is in play again, now coming off a bottoming formation as a trend rather than playing the bottoming formation. But as we see here with SPY now, we're going to make a run here and test, at least that's what it's trying to do here, test the old highs between about 210 and 214. And that's what we're keying in on right now. As long as we hold the 200-day and for this strong trend, the 9 is really key here. We want to be riding this 9 up. If we can do that, we're going to remain bullish and play to the long side. Now, current positions here, I've got WLH, which I entered last week here, still holding the 9. And this goes along with that theme that we've had, that housing is in play. And you can see this incredible volume pattern here, holding the 9, and we're looking for that next push up. Amazon, we took partial profits last week. The entry was in here at 573. We played this breakout and then moved to 600. I took partial here right where this arrow is, and now I'm playing for a bigger move to about 640, 650. And you can see here the 9's still holding, and that's key. I've moved my stop up, excuse me, to about 580 there. Now we're also short gold by going inverse DZZ. We're up to 650. Entry was around 625, 630. And if we pull up the gold ETF here, you can see we're at a key level right at the 50-day moving average. Now we want to see a break here and possibly a pull up back to one of these open gaps in here. And that would give us a really nice profit, and we could take profits then in DZZ. But if we bounce here, we'll probably have to get out of that. So this is going to be a key level going into the week. Let's watch the 50-day very closely with gold. FCX pulling back a little bit here, as is Joy, and that's been a theme going late in the week in commodities. Now these uptrends never go in a straight line. We're getting a little bit of a pullback. We'll see if we can hold through and maybe even get some better entries in commodity stocks. And a key development last week was that biotech broke out here off of potentially a bottoming formation. We can see IBB, the ETF here, broke the 50-day, as did the smaller cap XBI, which has been showing relative strength, which is why we entered on Friday LABU. And low risk, if biotech fails here, we can use a pretty tight stop of about 5 points, but we could get a really nice run in here. So that's the idea behind the biotech trade: low risk, high reward. So that's a recap of what we've done last week. Now let's look at a few of the stocks I'm looking at going into the week. Now, if you're a member of the trade report, I'm putting these out every day, and then you get a trade alert when I actually make the trade. Now, a few that we're watching are Netflix. Now, I'm not bullish on the FANG stocks, and they have been lagging and you can see this topping pattern here in Netflix where put in a high, tested that high, and failed, and now has failed the 200-day, but we're back up in kind of a do or die spot for Netflix here as it tries to break the 200-day. Now, Amazon already did, which is why we played Amazon here. Netflix has been lagging Amazon, but if it can break the 200-day, we might get a little run here, even if it eventually fails. So this week, does Netflix close the 200-day? Over the 200-day? If it does, we can probably go long. APEI, education stock, we've been watching education stocks very closely. Again, another sector showing relative strength and breakouts over these bottoming formations. And another one where we're watching the 200-day very closely. Tesla, everybody's been talking about Tesla. They've got that great car coming out here. What surprised me is the reaction to the news wasn't as strong as I thought it would be. It was gapping up in the morning around 245, and we wanted to see a strong close. If it had closed strong on Friday, I would have been in, but pretty weak close here. So we're going to be watching Tesla, and if it actually breaks down below the 200-day, I'll consider getting short here. And we'll see if it rebounds and gets above 250, maybe we get long, but we'll have to see what the price action is like. But wasn't happy with this close, especially with such positive news and the amount of orders that car has been getting. And finally, when we talked about this one as a trender in casino stocks, one of the leaders in casino stocks, and holding that 9, I want to see a breakout of this pretty tight range here around 97. So that's it for the weekly report. Again, if you're interested in more, you can sign up for the trade report, and we've got a great annual plan here. So until next week, have a great trading week, and I'll see you next Sunday.